Hello there, my friends. Chris Marcus here with you on July 31st, 2017. Today we have a quick video about some comments from investor and fund manager. I guess not sure if he technically manages a fund, but one of my favorite economists from a while back, Michael Pento, used to work with Peter Schiff, and I caught an interview with Michael on Greg Hunter's USA Watchdog today. If anyone has ever heard Greg Hunter's USA Watchdog, you know the pronunciation. Also, a quick note on July 31st, Major League Baseball trading deadline. My Red Sox got a reliever from the Mets. I don't know if that's good, if we want too many Mets on the team, but anyway, hope you had a good weekend. Hope baseball's going well for your squad, and let's dig in because Michael had some good comments. Again, if you're not familiar with Michael, he's a classic Austrian school economist, which we've talked about a bit before. Austrian School of Economics, basically a hardcore free market theory, which if you want to buy into the Fed's version of how this stuff works, knock yourself out. Although I think if you read about the Austrian school, Mises.org, Mises.org, after Ludwig von Mises. It's amazing how simple all this stuff can be when you understand that, as opposed to the Federal Reserve central bank nonsense. And maybe we'll dig more into the theory another day, but let's get to Michael's comments because he had a lot of interesting points here. First of all, and perhaps most importantly, Michael believes that starting in September, he thinks that the Fed actually is going to begin to unwind some of their massive balance sheet. Also, he said he expects that Mario Draghi of the European Central Bank is going to start tightening policy. Similarly, he also thought even the Japanese under Abenomics, if you have been following since, when did Shinzo Abe get elected? Was it 2012 or 13 or 14? But basically the prime minister of Japan a couple of years back basically got elected by promising to print more money than anyone. He promised to print so much money even Bernanke would be overwhelmed, and basically that's exactly what they've done. Now, Michael thinks that in the fall, somewhere in the September timeframe, all these central banks are going to say no more printing money. We're going to start retracting it, which certainly is possible. I'm not disagreeing with Michael there. I'm not sure that I see that happening. I guess it could. Greenspan finally raised interest rates after he lowered them, and that was what led to the collapse of the housing bubble. And certainly, well, if all three of those major players stopped printing money and actually started withdrawing the liquidity, yeah, you would see some fireworks. Certainly, it'd be fascinating to see what happens to these stock markets, which are, for the most part, all in record territory at this point. And actually, Michael had a great, we've talked about this before, but I like the way he phrased it. With one of the factors leading to the stock market is that the bond market has had negative yields. So following the housing crisis, all these central banks brought interest rates down to zero. And then when that wasn't enough, they took interest rates negative, which, again, if it seems odd, the idea of a negative interest rate, no, you're not alone. It's completely insane. It's basically saying, all right, I got my $100. I'm going to give it to Deutsche Bank or JP Morgan, and assuming they're still solvent, in a best case scenario, next year I get 98 back. All right. So what a great deal. And of course, that's one of the reasons why most people don't love having a best case scenario of only losing a little money. So that was one of the factors driving money into the stock market, along with all the printed money that has to go somewhere. So great formula for a stock market bubble. let's see. We had a couple other notes here. So anyway, Michael sees this, the liquidity being withdrawn and some dips in the stock market. Pointed out it's been a while since we've really had a 10 or even 20% correction. I would think that let's say the Fed had actually raised rates, sold off its balance sheet, which I don't know if that's even physically possible at this point, just because even getting any 10% of the way to that goal, I think would collapse this whole thing. One of the other things Pento mentioned was how you have so many hundreds of, was it hundreds of trillions of dollars of derivatives? We might even be into those numbers by this point. But all of these, similar when you saw AIG exploding a couple years ago. And all these things that the banks pile on that are based on low interest rates. And Michael was mentioning how there wasn't too much planning here, because it's like these things are great if you have low interest rates, but if interest rates ever go up, the thing collapses, which has been my belief for years, that we're well beyond the point of no return. And again, my opinion of why 8 years after the apex of the crisis, you still have interest rates so low, because it's not hard to see that if you normalize the interest rate curve, there's a lot of bad debt out there that would collapse in similar fashion to what we saw in 2008 and previous to that dot-com bubble. So again, will we see that happen in September? I would believe that we'll see rhetoric towards that, maybe some degree of that. My thought has always been that if let's say the Fed raises interest rates, I say raises interest rate, not continues, because, 8 years later, if you raise it 1% from 0 to 1%, I'm not really going to go out and do jumping jacks about that. That's not really raising interest rates, in my opinion. That's, crossing a few T's and dotting the I's. So another thing he mentioned, which I didn't double check this, so hopefully this is accurate, although in his interview he was saying how the NASDAQ lost 85% in 2000. I guess I never really realized just the magnitude. I think that gets lost often, where people can see the things that are happening, but really putting into context and perspective the magnitude of some of these moves. Similarly, as we've talked about previously, the magnitude of the increase in money printing since 2008. Again, we'd always heard these guys were printing a lot of money, and when you look at actually what happened, which you can find easily by Googling monetary base chart, usually pulls up, the first one is the St. Louis Fed monetary base chart, where you can see from the beginning of the Fed till 2008, it's kind of gradual and then spikes up, and that can distort things for a while. Yet when they're unwound, again, is why we see some real fireworks. Now, one comment and worth thinking about is that, let's say that Michael's right, the central banks withdraw the liquidity and you see a stock market crash, which I would say is all very plausible. I don't know if that's 100% certainty the route it will go. I don't think anyone knows how these things will unfold, which is why a lot of short-term trading, again, I was trained as an equity options trader, which by nature is a short-term trade, yet from my perspective later on as an economist, where, again, you can see things. Now, I didn't see the housing bubble. That was my wake-up call that led me to understand why these things happen. But if you see the factors in something like a housing bubble, you can understand certain things that almost have to happen by natural law over time, yet is a little tricky in the short term. So that's why a lot of what I focus on is, and I think it's good to be able to do that, because things are so skewed. You don't have to be guessing what's going to happen tomorrow or next quarter. You can simplify things, where that's why I feel comfortable if I own physical silver and I know where it is and it's stored safely, back to what Michael was saying, if you have a stock market crash, it's possible that gold and silver and the miners could get hammered along with that in the short term. Again, because of the various factors of how people are selling metal they don't own, and there's a bit of a Ponzi scheme and all that, I still maintain my belief that at some point, whether it's the day the market crashes or whether it's a couple months later, they're simply by supply and demand and the dynamics that we've talked about in the silver and gold market, they would have to go higher at some point. Michael was saying he could see that happening this year. In his opinion, he didn't see that possible for this manipulation to extend past 2018, which, again, I'd agree with that. It's always amazing to me how long this has gone on. I never would have guessed that, and certainly it's been an educational experience for me, and some days has gone better than others. But the point being, when you have real market chaos, there's going to be a lot of things that we don't expect, which is why I know sometimes some of these points get repeated over and over again, but they're worth repeating in that same way that, getting a reminder of having good posture or having good habits or fundamentals in the things that you do day after day. The way we're built as humans, we don't always. I remember when I was leaving Wall Street as I'm probably the most fun guy to be around, and then started learning about marketing and hearing positive thinking. And it's not, I don't know that we're designed to get all these things instantly, but you start learning something and then have it repeated and reinforced. I think it's worthwhile, especially with what we're heading towards, whether that's today, next month, next year. I continue to believe it will be sooner than later because it's stunning, whether it's the politics or we hear North Korea and their nukes and what they're doing. Again, saw a Wall Street Journal alert today. One of Trump's guys, I guess, was there for 10 days, and now he's on his way out. And certainly from some of the sources of information I hear, it continues to seem like it's a modern-day Julius Caesar going on in the White House. So when does it all change? That I wish I could tell you, and the day that I know, I'll be sure to share it with you so that you can be aware of it too. But hey, at least I can sit here and tell you I don't know that part, but what we can know is look at the things that are building and where that might naturally lead to. Two last points here worth mentioning. This one made me, I don't want to say giggle because it's not really funny, but Michael mentioned that a lot of people have been selling puts on the stock indices, which, oh dear God, where to begin on that one? Guessing maybe you might be familiar with that, but basically a put is an option, which it's really a volatility bet, but also there's a directional element to it. So let's say you thought the stock market was going to go down and you bought puts, you could do quite well. Although if you sell puts and then the stock market goes down, you leave yourself open to the opportunity of getting smoked. So a lot of people are seeing the stock market rise and expecting it to continue to rise and are selling puts. And it's kind of like selling insurance policies, which, if they're priced correctly, can be a good model. Although if you're selling volcano insurance and you see the volcano, like the lava's already coming out, half the houses have melted down already, and you're like, a couple pennies, we'll take them, we'll sell another policy. And if you're getting pennies, yet if it blows up, you have to pay out hundreds or thousands. The risk-reward skew, not really so great. Of course, if you've been selling puts while the market's going up, then you picked up some premium. But man, if you're selling puts the day that some of these things come to a head, it seems like a pretty risky strategy to me. So again, just you can make your own decisions. No specific advice here. I'm just your friendly economist, letting you know what's going on and just helping you understand some of hopefully the ramifications of these different trades and decisions and things that people are doing, and give you my opinion on what might make sense to me, which might be different for everybody. But I thought that was interesting that Michael mentioned that people are selling puts, which just seems like playing with fire. And then perhaps the last thing to wrap this one up, I know we've gone a little bit long today, but let's say Michael's correct and the Fed starts selling these bonds, Japanese central bank starts selling these bonds, European central bank starts selling these bonds. Who's going to buy it? I mean, if you know that the biggest player is unwinding their balance sheet, and I mean, that's why these central banks ended up with all the bonds, because who else was going to buy them? Which is, again, why we were able to understand that they put themselves really into a corner, because they've bought all this stuff that nobody else wanted to buy. And, if the Fed says they're going to sell these things, who's going to buy them at these levels? And if they really start selling, what level are interest rates going to have to go to before you find some buyers? And with higher interest rates, what's going to happen to the mortgage market, which again is such a huge component of all this stuff out there. So, that's why I steer clear of most of these assets that are at record highs, certainly in bubble territory, in my opinion. Hey, can you buy buy stocks, and can they go higher? Sure. But is there a real risk that they get clobbered? Yeah. And when I look at silver, which is basically trading at the cost of what it takes to get it out of the ground, I don't know when my silver bet will pay off, but certainly makes a lot more sense to me than buying stocks or bonds where now you have the central banks basically coming out and saying we're going to be a massive seller, so why stand in the front of that steamroller? And in either case, let me know what you think. Leave your comments below. I know it sometimes looks like watching paint dry the way these things drag on, but I have yet to see anything that would lead me to believe that we're not headed towards something like 2008 where it's slow, and then when it happens, things really happen. I continue to believe we're on the verge of seeing the type of changes in the world that will be unlike anything that's happened in my lifetime. I don't know, is this going to be similar to the fall of the Roman Empire? I kind of think so, the more you really dig into it. And it's kind of funny, a couple times I've watched some documentaries about the way things happened back then. The similarities are incredible. It's kind of like you can just take out some of those names, insert an Obama or a Bernanke or a Geithner, and amazing the similarities between the two. Again, that doesn't mean that we have to be the ones getting clobbered. Appreciate you watching these videos, and I'd like to think that as you continue to understand and see what's really happening, that in my opinion is quite different from what's often reported in the mainstream media, you can really prepare yourself in whatever way is appropriate to you. If you do have specific questions that you need help with, the link to our website is below, and if you need to talk with someone and get in contact with us here at Arcadia, we'd be happy to help you answer some of these questions. I know everybody's facing different challenges, and that's what the whole purpose of the channel is. So again, leave your comments below and go out, do something fun, and remember that one way or another, all does work out, and I think you're ahead of the curve. And that said, thank you again for watching, and we will see you tomorrow.